Hello, everyone. Welcome to the Final Bar. I'm Dave Keller here at StockCharts.com in Redmond, Washington. Markets are closed for the Juneteenth holiday, so we thought we would take this opportunity to give you some things to think about, focusing on charts and particularly what makes a good-looking chart. This was a discussion we had, some of us internally here in the last couple of weeks. Like when we say, and I think it was a question actually from one of our viewers, when something's a good-looking chart, what does that actually mean? I chatted with Grayson Roze. We went for a coffee and we were talking about that, kind of giggling about the question, but then thinking about what is it really that defines, right? If you had to lay out the things that would define a good-looking chart or an attractive chart, what would those things be? So I made some notes and I came up with a presentation, which I'm excited to give you in a little bit, just showing you the 5 components I look at to assess whether a chart indeed is a good-looking chart or not. First, we're going to go to my friend Grayson Roze, the VP of Operations here at StockCharts.com, and get his take. So Grayson, what do you decide? How do you decide something is a good-looking chart?
So what makes a good-looking chart? First off, to whoever asked this question, you are awesome. Thank you for asking this. Because when I was talking to Dave about it the other day, I realized, you know what? I do the same thing. I say, oh my gosh, this is such a good-looking chart. Oh my God, that's a great-looking chart. But we never really define, why does it actually look good? What is it about this chart that makes it so attractive? So this is a fantastic question, and I am excited to answer it. Now, for me, when I think about what makes a good-looking chart, it actually starts off the chart. Now, I want to think about the criteria that's going to go into kind of my ideal setup, right? As a trader or as an investor across different time frames, I want to think about ideally, conceptually, at a high level, what do I want out of a chart? Now, for me, it comes down to stocks making new highs, primarily stocks making new highs that are outperforming the market. Something that we've talked about recently on this show, something that I love to talk about if you follow my work, is the importance of relative strength. Now, we've got lots of opportunities out there to go and buy these market tracking ETFs. ETFs have been an incredible addition to the markets and an incredible addition to our toolkit as investors and traders. It's so easy to go buy something like SPY and just let it ride for years and years. And I can do the math. I know that something compounding at 10% is going to yield a huge, huge return over 10, 20, 30 years. So if I'm going to take on sort of the risk of buying something, I need to make sure that that's outperforming the market. So that's one of the things that I think of when it comes to kind of my ideal setup. So I like to think about, all the criteria that's going to go into my ideal chart. I like to think about putting that into my scans and my alerts and things like that. But really, when I'm looking for, what's the ideal chart, I'm trying to think about kind of opportunity that I can capitalize on. That's what I'm trying to find in the charts, is opportunity that I can capitalize on and risk that I can manage. So let's jump over to StockCharts and I'll show you kind of what goes into it for me. Now, in this case, we're looking at my dashboard. We're looking at my account. And I am actually going to give you guys a peek into kind of my watch list, show you how I manage all of the different things that I'm watching and how I sort of start to filter it down. So I'm going to jump down here and I've got something in my account called my Tier 1 watch list. Now you can see I've got a couple of these, and what I like to do is actually have multiple watch lists and I kind of move things through those lists. If we jump over though to the chart list view, actually let's jump over to summary view really quick. You can see that I've kind of taken this big list of stocks that have come across my screen, things that have sort of tricked my criteria. And sort of fit my my ideal setups. And I like to actually use a starring system to kind of organize those. But if we jump into some of the charts for these, you can see my ideal setups are stocks making new highs that are outperforming the market. Again, if I'm going to take on sort of the additional risk of owning something that's not SPY or VTI, something like that, I want to make sure that it's outperforming the market. So in my case, Dave talked about trend and momentum. I'm looking for similar things. I'm looking for stocks that are continuing higher, that are trending higher, that are making those new highs. That's actually primarily what I'm scanning for, is new highs across a couple of different time frames, all-time highs, 52-week highs, 9-month highs, things like that. And not just stocks that are making new highs, but also things that are outperforming the markets. What we have up at the top of all of my charts is a relative strength line that shows the symbol versus the total market, in this case, the Vanguard Total Index. So something here like Applied Materials is an ideal setup for me. Again, this is a stock that's making new 52-week highs. It is outperforming the market, as we can see. And when we draw those horizontal lines across this chart, we can see that we have a lot of opportunity for this to move higher. And we also have a very clear, well-defined level to manage risk against. Again, that's what I'm trying to do. If I'm going to take on the extra risk of going out there and buying something that's not SPY, I want to make sure that I can manage that risk. I want to make sure that I know where my entry is. I know where my price targets are. I know where my stops are, most importantly. And so I'm looking for these types of charts that are making those new highs and doing so while outperforming the market. So if I scroll through a couple of these charts, you'll see that they actually look very, very similar. Again, here's another technology stock, in this case, Ansys, that is outperforming the market, has actually kind of reversed course, was an underperformer, but has started to move higher on price itself while also outperforming the market. And again, it's taking out some of those key levels that I can manage risk against. So what I like to do on my charts is use those annotation tools, also use the horizontal line indicators, and draw those horizontal lines across my charts. Trend lines are incredibly important, but the downside of trend lines is that they could be very, very subjective. Does this high count? Does this low count? Those trend lines oftentimes can kind of trip us up. Horizontal lines, I find, are a little less subjective. It is a horizontal line. You draw it across the chart, and you can see how many times price has crossed that line. So in this case, I like to use those horizontal lines to mark those new highs. And most importantly, when I'm actually going to go place a trade, I'm using those horizontal lines to mark those levels that I'm going to manage risk against. We can keep on scrolling through some of these. You'll see that they look, again, pretty similar. Here we have a stock, Avnet, that is breaking out to new highs, but just starting to outperform the market. So this one is a little bit lower to me because it hasn't had that recent relative strength. Overall, has had a lot of relative strength. We can see that this is outperformed the market over the last year and a half by about 38%. But when I'm thinking about taking a trade, I want those two things to line up. I want the relative strength to be moving higher, ideally making highs on relative strength as well as price alone. Price is going to be first, but relative strength comes after that. Then I'll start to use confirmations like moving average positions and volume and things like that. But again, my primary filters are going to be price itself, making those new highs, and relative strength. Now, if we scroll up, I actually want to go back to that Applied Materials chart because it's a really good example of some of those other factors coming in for me. When I look at a chart like this, once I've confirmed that we are making those new highs and I've kind of drawn those horizontal lines across my chart, I know the levels that ideally I'm going to manage my risk against. And I've confirmed that we are outperforming the market. We've got that with our relative strength line up there. That's when I'll start to bring in some of those other indicators, which I want to show you here in just a second. So I do have a couple of key moving averages on this chart. I've got the 50-day simple, the 200-day simple, and then in between those, I've got the 100-day simple. Now, what I like to find with my moving averages is that they're lined up properly. I want the 50 above the 100 above the 200-day. If I see that 200-day has been coming down and things look good in the short term, but none of those shorter term moving averages are above those longer term moving averages, that might be a filter for me to say, okay, let's go find one that's got a better sort of moving average setup, if you will. I actually also have the 20 kind of hidden on here. So when it gets down to it, I can turn on that short-term, very short-term 20-day moving average as well. So I do like to look for things like those moving averages coming together and sort of setting up in the right formation. And I do like to look at relative volume. So volume on its own, not that interesting to me. It's great that something's traded this number of shares this day. But what is that relative to the average volume that symbol trades? So that's why, as you can see here, I've got volume on my charts, and I've got a 200-period moving average of volume. That gives me a long-term indicator to say if volume is, if this stock is breaking out on a bunch of volume bars that are above that relative volume line or that average volume line, it's breaking out on high volume. Those are the kinds of things that I might want to look for. But again, I do want to stress that those are sort of secondary filters for me, secondary to, of course, price itself and relative strength. So those are the kind of things that I like to look for on a daily chart, which is the sort of primary that I'm looking for. But I do also like to look at multiple time frames to sort of find the best looking chart out there. So for me, when it comes down to picking a stock, we'll actually jump over here to the Sharp Charts workbench. One of my favorite features of this workbench is something that's kind of hidden for a lot of people over here on the left side. These are what we call style buttons. So I have quick access to different chart templates that I can quickly apply. If I want to look at a daily chart with all of the indicators that I ever would want to look at, that's quickly accessible from over here on the left. So this actually brings in a couple of other relative strength measures so I can really drill into relative strength. Also brings in things like RSI, accumulation distribution, and the scooter line down at the bottom. But the key thing that I use those style buttons for is actually moving through timeframes. So to me, the ideal chart, a great looking chart, is not just set up on one time frame. It doesn't just look great over 1 year. It looks great over 5 years and 10 years and 15 years as well. Those are the things that really make an appealing chart to me, or an appealing trade opportunity. Again, thinking about opportunity, thinking about risk, I want to invest in things that look great in the short term. They look great on that daily chart, and they're breaking out to levels that I can manage my risk against. But I also ideally want to find things that have been moving higher for a long period of time and kind of have a character of outperformance. So I can quickly jump over to something like a 15-year weekly chart, again, just using those style buttons. And you can see that now I have a long-term picture. So to me, bringing in additional time frames, whether it's a long-term perspective like this, or if we jump to a very, very short-term perspective, here we have a 75-day, 1-minute chart. This is kind of the opposite of that. We're jumping down to a more narrow time frame. So I like to look across time frames to confirm that primary chart, that primary daily chart, truly is good looking. If that stock has a history of underperforming and has been in a long-term downtrend and is only recently kind of picking back up, then that's actually not the most attractive daily chart to me. When I can find something that's paired with a long-term trender and a short-term chart that's showing, good accumulation, good volume trends, and good short-term outperformance. Those are the kinds of things that make a good chart to me. So those are some of the things that I look for to define a truly good-looking chart. Again, thinking about those charts as opportunity that you can take advantage of, risk that you can manage, and thinking about them across time frames as well. It's not just a singular chart that's setting up on one time frame. I like to find those charts that are set up across multiple time frames, long-term, intermediate term, and short-term. To me, that is what makes a good-looking chart.
Awesome, Grayson. Thanks so much for that. And it's funny, Grayson and I have so many similar ways that we think about things, particularly a focus on relative strength. Anytime I ask for Grayson's opinion on a chart, I usually get an answer involving relative strength. That's why he and I are kindred spirits in terms of our analytical process. We focus a lot on strength versus weakness and leaning into things that are working and leaning away from things that are not working. Now, when I try to define a good-looking chart, again, I often make the shorthand comment of, oh, this is a good chart, this is a weak chart, this is a strong chart. So what do those words actually mean for me? I break it down into 5 different things, and I'll go through each one of them one by one using an example I'll show you here in a minute. It starts with price, then goes to momentum, which is basically the strength or weakness inherent in the price movement. It's confirmation. How do you confirm the movements in price by using some other indicators? It's performance, looking at how this stock or ETF has performed relative to other things, other levers you could be pulling as an investor. And then my exit strategy, right? And I include that as one of the things about a good-looking chart because for me, an attractive chart means you have a clear setup, a clear game plan, and that game plan involves an exit strategy just in case things start to turn south. Now, as an example that I want to show you of a recent example of what I call the fat pitch chart, I'm looking at Lennar Corp, LEN. Now, Lennar is part of the home builder group. This has been one of the top performing groups in 2023. I've rewound the clock a little bit to go to the beginning of March because I think that's where it was really an ideal setup for me. Now, when I think about what defines a strong chart, I'll go one by one. It starts with price. Now, Charles Dow, again, 100 plus years ago, came up with the very basic premise that a trend is defined by the highs and the lows in the price. And an uptrend is a pattern of higher highs and higher lows. So I want to make sure before I'm going to judge the attractiveness of a chart, I do that very basic assessment. And what's really funny is I remember years ago, my daughter, who's now in high school, was maybe 3 or 4 at the time. And I was looking at charts as technical analysts apparently do. I'm at the kitchen table drawing notes on a bunch of paper charts. And my daughter looked over and said, "Daddy, can I draw pictures too?" And I was struck by the simplicity of her question and also how meaningful that was, right? What I was doing was essentially just very quickly defining, is this chart going up or down? And I would encourage you to approach this like you would a 4-year-old. Get out your crayon and just literally define, is it going up? Now, the chart of Lennar in early March definitely was. And I would say coming out of the June 2022 low, we made a higher low in October. And I think that's what really sets the stage for me of an attractive chart. I'm never going to consider something making a new 52-week low, no matter how compelling of a fundamental idea it is. It's not an attractive chart until it starts to rotate. So making a higher low, I think, was meaningful. We'll talk about moving averages and other things in a moment, but it's all about the trend. So making a new high, making higher lows along the way was meaningful. So at this particular moment, it had actually pulled back and was testing and so far making a higher low, or at least a low aligned with the January low, which was that most recent higher low after it made a new high going into the beginning of the year. Now, other indicators like moving averages, like support and resistance levels, like Fibonacci retracements, for me, all fit into that first category, which is price. I want to ground my analysis based on the price conditions. So the fact that we've pulled back to an ascending 50-day moving average is super encouraging to me, because that tells me that we've pulled back to a point where strong stocks tend to pull back and then tend to rotate higher. This is that sort of buy on the dips mentality, or what I call the fat pitch chart. Now, it's baseball season here in the beginning of the summer, and so a fat pitch is, if you're not familiar with baseball, is when the baseball is literally right over the plate. The pitcher leaves it hanging, and you have to take a swing at it. It doesn't matter what the count is, what the situation in the game is. You want to take a swing because it's just a high probability ball that you probably want to take a shot at. That's how I would consider a strong longer-term trend that's been weaker in the short term. That tells you that there may have been some profit taking, but it gives an opportunity for new buyers to come in. It gives an opportunity for a bit of a reset for the uptrend. So a pullback after a new high to an ascending 50-day moving average is kind of that sweet spot. That's a pitch right over the plate, what I'd call a fat pitch chart. So price, in my sort of general approach with Lennar, is pretty constructive here, because we've been making higher highs and higher lows. We're recently testing a support level, and we're testing an ascending 50-day moving average, just starting to bounce off of there, which I kind of like. The second thing I would look at is price momentum. Now, if you've watched the final bar for a while or followed my work, you know I'm a big fan of the RSI, the Relative Strength Index. This is an indicator designed by Wells Wilder to measure price momentum. Now, what this does is basically look at the price movements in a little more detail. You can't see, it's obviously doing this underneath the calculations of the indicator, but what it's basically trying to calculate is when the stock closes higher during this trend, how much higher does it tend to go? And when it closes down, how much lower does it tend to go? The RSI is very simply, or to oversimplified version is, it's basically the average up day versus the average down day. So when the RSI is at 50, it basically means the up and down days are pretty even, right? There are up moves, there are down moves, but in the end, they net out to about an even strength between the two. When the RSI is above 70, that means the up days are far stronger than the down days. When the RSI is below 30, that means the down days are much stronger. So by looking at the overall momentum picture, we can identify if we're overextended, potentially on the upside or on the downside. But an interesting thing happened here in late February into early March, as I'm thinking of Lennar as a potential long idea. We've pulled back a little bit, and the RSI bottomed out right at 40. This gets to what people like Connie Brown and Andy Cardwell and others, who I would consider pioneers in the use of technical indicators, really improved on Wells Wilder's work to show that in a bull market phase, the entire range of the RSI actually pushes higher. And when we rally, the RSI becomes overbought. When we pull back, the RSI usually bottoms out around 40. It usually doesn't get much below there. So the fact that we've pulled back to a support level, pulled back to the 50-day, and the RSI has remained above 40 is a second main component called momentum, which tells me that it's a pretty good opportunity yet again. The third piece after price and momentum is looking at confirmation. Now, I'm not showing this indicator yet, so I'm going to swap this out for the MACD or the PPO. I tend to use them interchangeably, to be honest with you. They're very, very similar, and these are indicators created by Jerry Apple was the one who first created MACD. It was evolved into things like PPO, and others have created similar indicators, really riffing on Jerry's work, looking at trend and phases of trend. And what you look for with the MACD indicator is when the indicator goes below zero and then gives a buy signal where the MACD line crosses up through the signal line. You see a buy signal here in September, another secondary buy signal there in October. Then we're above zero, so it's sort of wait and see. Now we're back below zero. So at this point, it's not quite there, but really, really close. A buy signal when the PPO or the MACD line crosses up through the red signal line, that's more of the confirmation. That the first couple, the price and the momentum tells you we're sort of looking similar to previous buyable pullbacks. The MACD indicator giving a buy signal is more of a confirmation. This tells you, yep, the bottom is now in. And if I forward the price just a little bit, maybe to the end of that week, I bet we'll see the PPO indicator, the MACD indicator giving a buy signal where it crosses up through the signal line. So that is my third item, which is called confirmation, telling you that we've now broken out and we've rotated into more of a bullish phase. And the price is bouncing off of support, bouncing off of that weak momentum that we expected based on those first couple bullet points. That brings us to our fourth bullet point, which is relative strength, or what I call performance, right? What you have to remember as an equity investor is you basically have the ability to pull all sorts of levers as an investor, and at the end of the day, it's all about how this chart compares to other similar charts. And if you look at what's happening with the relative strength over the last 12 to 14 months on Lennar, is that it's gone up. Even as it was in the bottoming phase from April of 2022, really through October of 2022, it made its low in June, while the major benchmarks actually bottomed out in September and October. Lennar and some of the home builders actually bottomed out a little earlier in June. So they were making a higher low, while the S&P was actually making a new low into October of 22. Talk about a great precursor to a stretch of outperformance. The relative performance, or the relative strength line going higher is so important because that tells you not just that the trend is positive, but that you're doing better than owning a passive vehicle like the SPY or the Qs or something. This is a simple ratio of Lennar versus the S&P. The fact that it's trending higher is what's so meaningful about this chart. Now, I fast forwarded to today so you can see what sort of happened after that May pullback, and you can see indeed, of course, the price has rotated higher, right? As we pulled back, had that fat pitch environment, we've rotated higher. We've bounced off of the 50-day moving average. We've now made a new 52-week high just this week as we're recording the episode. The momentum has bounced off of 40 for the RSI, and it's rotating higher. Not yet overbought, which tells me there may be further upside. The relative strength softened up just a little bit here at the end of May, but overall still remains in a strong long-term uptrend. This brings me to the fifth thing. Why is this an attractive chart? I would say because there's a clear exit strategy. And I include this as one of the signs of attractiveness because sometimes it can be a little murky, right? It looks like a good idea, but where would I put a stop? And there's no real clear technical idea or technical level which may make sense. What's great about a stock that has pulled back and then rotated higher is that recent pullback is usually a really good beginning stop. I like having a stop right at that the lows of that level. So this would be around 106. As long as we remain above there, the trend is positive. As the trend persists, which hopefully it does, then we can bump our stop up. Maybe we use the ascending 50-day moving average as a trailing stop. Maybe we use something like the chandelier strategy, which Alexander Elder popularized. Some other ways of trailing through this behind this uptrend to recognize and lock in those gains if and when the price would turn lower. That's why Lennar, for me, is a really good example of an attractive chart. Strong price, but a recent pullback. Strong momentum showing you that the overall trend is positive. Strong confirmation, the PPO or MACD indicator giving a buy signal. Relative performance being strong because it's outperforming, and I have a decent exit strategy. What do you think? What makes an attractive chart in your mind? Did the comments that I made and Grayson Roze made help you along your way? Give us a comment below and let us know what you think constitutes an attractive chart. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be well, stay safe, and we'll be back again soon.